All right, we're opening up a case file on a massive fintech mystery. Billions of dollars and the dreams of millions get poured into these new digital payment systems, but way too often they just vanish.
So the big question, the one we're really trying to answer, is this. Why do these technologies, which seem to work so well in one part of the world, just completely collapse in others? What is going on here?
And the stakes couldn't be higher. This is about so much more than just a cool new app. It's about financial inclusion, about connecting millions of people to the global economy. But that amazing promise often just slams into the harsh reality of a total system failure.
To solve this mystery, we're not just throwing out ideas. Nope, our investigation is built on the hard evidence from a huge review of 274 separate academic studies. We're going deep into the data to find out what's really happening.
The clues to this whole thing are hidden right there in plain sight, scattered across the tech, the policies, and of course, human behavior. So let's dive in and start identifying our main suspects.
Okay, so our first and most obvious suspect is the technology itself, right? When you think of a digital failure, your mind probably jumps straight to bugs, app crashes, and just bad code. And honestly, you're not wrong.
The real problem here is a concept the researchers call friction amplification. Think about it. The whole point of digital is to make things easier than cash. But when you get all these glitches and failures piling up, the technology actually makes life harder. It amplifies the friction instead of getting rid of it. And just look at how fast things can completely fall apart. So a single transaction fails at a local shop. It's annoying, sure, but it happens. But then, the user's money is gone, and they're told the refund could take up to 2 weeks. For someone on a tight budget, that's not an inconvenience, it's a crisis. Trust is just shattered. They tell their friends, their family, and suddenly, both the customer and the shop owner agree, cash is just safer. And poof, the digital network has just sprung a fatal leak.
And this really gets to the human side of it all. This isn't just a data point on a chart. For a user who felt that panic of their money just disappearing into some digital void, well, that fear doesn't just go away. A single bad experience can poison the well for good. But faulty tech doesn't exist in a vacuum. Let's bring in our second suspect, because this is where things get even more complicated: the rules of the game. We're talking about government policy and regulation. Policies that are designed to help often do the exact opposite. Just look at this typical timeline. A government launches a subsidy to get people to use digital payments. And hey, it works, transactions spike. But it's an illusion. People are just gaming the system for the free rewards. The actual network of shops and agents isn't growing at all. So the moment the free money runs out, the whole thing just implodes, leaving it in an even worse state than before it started. And this chaos, created by policy, is absolutely crucial. When the rules of the game are constantly changing like that, how can any company make the long-term investments they need to build a stable, reliable system? They can't. The whole foundation is basically made of sand. Which brings us to our third and final suspect: market forces. This is all about who holds the power in the market and whether the products being sold are even what people actually need. So in a lot of these markets, the situation looks exactly like this. You have a tiny number of providers, we're talking just 2 or 3, that control over 80% of the entire market. When you have a monopoly like that, what's the incentive to get better? To lower prices? To serve those harder-to-reach rural customers? Yeah, there isn't one. And this leads to this fundamental disconnect. On the left, you see what most people in these areas actually need: simple, cheap, reliable ways to handle cash and pay their bills. But on the right, that's what they often get: these super complex apps designed for wealthy urban customers, loaded with high fees and spotty service. It's a textbook product-market mismatch. This quote from users in Nigeria, man, it just gets to the absolute heart of the trust problem. It's not some abstract concern for them. It is a genuine, deep-seated fear that their hard-earned money can literally vanish into thin air. If people believe that, no amount of fancy technology is ever going to convince them to switch from the cash they can actually hold in their hand. So, we've got our 3 suspects lined up: faulty tech, broken rules, and market forces. It's time to deliver the verdict. But this case isn't quite as simple as just pointing the finger at a single culprit. The investigation reveals a classic plot twist. It wasn't the tech, and it wasn't the policy, and it wasn't the market. It was all of them working together in a conspiracy. No single suspect acted alone. What happens is they create these awful, vicious cycles, like this one. the trust outage feedback loop. A technical glitch happens, which, as we know, erodes user trust. So people use the service less, which means the company makes less money. To save cash, they cut back on maintenance, which, you guessed it, leads to even more glitches. The system literally eats itself alive. This shows exactly how the problems cascade. I mean, just look at the top row. A government policy decision puts stress on the infrastructure, which then causes system outages, which completely destroys user trust. See? One problem doesn't just add to another, it multiplies it, triggering this domino effect that brings the whole system crashing down. And these cascades have very real tipping points. The research shows that if your transaction failure rate climbs above 8%, user trust becomes almost impossible to win back. It is a point of no return. And here's another one. If more than 30% of your on-the-ground agents, the local people providing the cash services, if more than 30% of them leave the network, the physical gaps in coverage become so huge that the system just isn't viable anymore. The whole network collapses. So let's just let that sink in. The critical point here is that we can't look at a tech failure or a bad policy or a market issue as separate problems. They're not. They are all just symptoms of one bigger reality, a deeply interconnected and extremely fragile system where one tiny break can shatter the whole thing. And that leaves us with a final, much bigger question. The evidence shows the real challenge isn't just about writing better code or designing a prettier app. It's about understanding and designing for the complex, messy, interconnected systems of the real world. This case isn't really about fintech, is it? It's a lesson for anyone trying to build anything meaningful. And the real question is, are we ready for that challenge?